I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara and this is the Know Your Why podcast. Today I'm here with Sakit Jain. Sakit is a #1 best-selling author, investor, syndicator, tech enthusiast, and philanthropist. He is the founder and CEO of Impact Wealth Builders and is passionate about achieving financial freedom through real estate. Sakit, I'm going to stop there. And first of all, I guess I should thank you for coming on the show. I appreciate you taking the time. I know we had a little, between the two of us, we both had schedule changes come up through making this happen. So I appreciate you being here and taking the time.
Yeah, you know what? Things are never easy for a show that's this good.
Yeah,
So I'm looking forward to being on this show. Thank you again for having me on the show.
yeah,
I really
absolutely.
appreciate it.
Absolutely. My pleasure. Why don't we start by just letting you tell your story? Tell us your background, start wherever you want. For those of you who are not looking at his bio, it's extremely impressive, but I think I'd much rather hear you tell us your story, and we'll talk about all that you've done and how that all ties in together.
Yeah, definitely. It's not a long story, so we'll cover it very short. I'll keep it very brief. So if my accent didn't give away or my name didn't give away, I grew up in India. So I came here to this country about 22 years ago. In the last 22 years, I've probably changed 25 addresses. A very different podcast show, Jason. We'll probably do it at some point.
We could do that because I've moved probably that much as well. So it's
I knew there was a tribe here somewhere.
right. I don't know what the exact number is, but surely it's more than 20. So yeah, we could have that.
We should have a podcast just focus on what not to do.
Exactly.
In life. Do not move.
Yeah.
Anyway, so as we were talking about, in terms of my own background, like any of an immigrant, I went to the best schools in India, IIT. It's one of the best engineering schools in India. I got my MBA from Columbia Business School here. Went to the best colleges, best schools, best employers, with Booz, with Johnson Controls, and most recently with Airbnb. I have this goal always, and I think it was ingrained in me to be focused on pedigree. Along the way, back in 2016, I got laid off. It changed everything, right? Because I equated in my mind, pedigree is safety, pedigree is consistency, pedigree is a blanket of security that's always going to be around you, right? That's how I looked at it. I don't know if that's what was the intention behind pedigree, but that's what I had equated it to. And my whole world shattered at that point, Jason. It was a lot about here I am in this country. I have to now take my kids out of public school. I have to go move in with my in-laws. I have to move states at that point, and we have to go restart the whole life. By the way, all along the way, we're bleeding cash, right? Because that's where our lifestyle was, and that's really what changed. Looking back, I'm glad it happened. At that time, it was very painful. It took me about 2 to 3 months to regain my composure. I was sad, angry, jealous, any negative emotion that one can ever feel. I probably felt that in 3 month time frame. But eventually, I was able to flip my script and really started looking at, whatever has happened, and instead of asking the question, why me and why now, let's flip the switch to why not me and why not now. It's amazing. Sometimes we run away from negativity, and I ran towards it, not intentionally. Somehow I ran towards it. I can't take the credit that I carved that path, but somehow the negativity is the path. Then the negative word is the one that got me out of that situation. We started looking at cash flowing assets, creating multiple streams of income. Essentially, was a goal. Outside of the employment, I knew I can always find an employment. That was never a problem. But the problem was how to never get into this situation again. That's when I started looking into real estate. um, I looked at oil and gas. I looked at all different classes that I could think of. Buying businesses was never hard for me because I did that in my previous life. So it was not easy to analyze the business and buy them. It's just what asset class is going to serve the purpose I needed to get it. So we picked up real estate, and like most of the people, we went from owning single families to now owning 2,000 units with my partners. So that journey has been amazing, but all of that I credit towards that one single incident that happened in my life where it changed my thinking to let's not have the employment as a single stream of income. Let's diversify. I for the first time in my life, Jason, I understood the word diversification. I think till then I was just listening to financial advisors, and I really didn't internalize it, and that just changed the whole trajectory.
Yeah. I think, obviously those moments of hardship, whatever you want to refer, the negative points, you can go two directions, right? You can sort of go the victim direction and sort of let it eat you up, or you can, do what you did is find a way out, find a better way, find an alternate approach that, in a lot of ways, if you choose that sort of positive route, now you're changing your whole life, and you're changing it for the better, really.
Yeah, it's easy to be a victim. Victim is easy.
Yep.
Let's find somebody else to blame for our situation.
Yeah.
And I think most of us are somehow, unfortunately, and there's no fortunately here, for unfortunately been trained to find somebody else to blame. Like
Yeah.
our media pushes it. Sometimes our parents push it. Our ecosystem pushes it. Friends push it. Let's figure out somebody to blame. And I think that breaking away from that mindset, it's actually freeing. You're basically saying, I have to live with the cards that I've been dealt with, and I can't change that. Let's stop complaining and let's start fixing. So you actually becoming more of a solution provider than being somebody who's just complaining. I think, but also I say that, but I also want to say, look, emotions have a place in everyone's life. Like, you know what? Everyone has the right to feel the way they feel, because that's very important. Because if you negate a certain emotion, there's gonna be a volcanic eruption at some point in your life,
Right.
and you don't want that. So you got to acknowledge your emotion and figure out a time frame of how much, be it a minute, an hour, a day, a week, a month, a year. Figure out your own time frame of at what point you're going to move out of it. I can guarantee you, once you start putting a time on your negative emotion, the emotions that are not serving you well at that time, you're going to be able to snap out. Even if you put a time limit of a year, you're going to snap out in a minutes, because your mind already starts working towards solutions at that point, because
Yeah.
it knows it has a definite time, and it doesn't want to wait till that long.
Right. Right. Yeah. No, that's a great point. I mean, I don't know that I've ever heard someone say that, but yeah, putting a that time frame, because for sure, if you don't let yourself feel those emotions, you will eventually you'll feel them. You just they'll come
Eventually
up when
it'll
you don't
feel,
want
and
them
it's going
to.
to be exponentially higher.
Right. Right.
Yeah.
Yeah. So it's not so much that, we're saying don't recognize these bad emotions and but you've got to figure out a way to move through them, in some time. So yeah, take your time.
And I think the time frame thing, right? I think it's really a hack for me, and
Yeah.
hopefully it works for everyone. It's for me, it's really a trigger. Anytime a negative emotion comes now, I'm like, I'm going to feel it for a minute, and I'm going to play it out.
Yeah.
And if it serves me after a minute, I'll extend it by another minute. I'll extend it by another minute, right? But really, after a minute or two, it's easier now because I've built that muscle. It's easier now for me to go into a solution mode rather than a complaint mode, from victim to victor.
Mhm. Yeah. Yeah, no, I think that's a great point. And I think another thing you said that I really liked is you kind of learned what diversification really means. And I think, a lot of people think they
Definitely.
have diversification within their IRA or their 401k or something like that, but you don't.
Mhm.
You have different stocks, but you have the stock market, right? You're not diversified across asset classes or anything. And in a lot of
Yeah.
people's instances, you're not even in control of it. Your 401k is being controlled by whatever servicer that your
Right.
employer has and things. So you you just need to think about all those different aspects and how it all intertwines. So I wanted to kind of point to that, and I think that's an important point, is that what does diversification truly look like? And
Yeah.
it's not just
different stocks.
And it's kind of like we can take the word diversification into different vector as well. Like diversification as a concept has always been more around investments.
Mhm.
I actually think about diversification much more broadly now. It's not just about investment, it's your time, it's your relationships, it's anything you do in your life. You need to have diversity in there because if you don't, you're going to eventually come to a point where you won't feel fulfilled. Because if you just pick one aspect of life and just go full into it, be it work, be it friendship, be it relationship, whatever it is, you need variety, right? I mean, the Tony Robbins 6 human needs, that's a perfect example of that. As in, you people have the need for certainty, uncertainty at the same time, significance and connection, and then growth and contribution. All of them are very, very contradictory to each other, yet very entangled. So the variety is actually going to be the juice of your life. And the variety is essentially diversification. Now, the word diversification has a very negative connotation in some people's mind. So it was for me that diversification is a word that a financial advisor uses. But I think I have since, for myself, I've used that word a lot describing what I do.
Yeah. Yeah. I love it. I think it's great. Great point. Um, so you said we started like everybody and got, had some single family houses and then we had 2,000 units. So that's not, we touched on this before, kind of before we started
Mhm.
recording, but that's not really how it works, right? It's like you don't go
It does
from
not, man. That's a highlight reel. Highlight reel
right.
is always amazing.
Right. That's the
It's not the
highlight
real
reel.
life.
That's what you put in your social media is yeah,
Correct. Correct.
we had a few single
Exactly.
family houses. Now we have 2,000 units. And I, I would love for the listeners, because I think a lot of people, listening to these things, either whether they want to be an active investor or a passive investor,
Hmm.
if they're thinking about investing, it may be, especially if you're trying to be an active investor, it may feel daunting
Hmm.
to say, okay, well, I have those couple, I have
Single
those few
families.
family units, but now I need to get 2,000 units, and the scale of that and the ability to kind of move in that direction. Maybe kind of talk us through a little bit of your
Yeah.
process, how you did that, but also maybe some of the mindset you used to make those shifts.
Definitely. I mean, as I think, Jason, you would agree with that. I know we haven't talked about it, but whatever you do in life, 80 to 90% is mindset, 10% is
Mhm.
mechanics, right? So for me, it was when that shocking moment happened for me. I always knew at that point that no matter how much I know about something, there's way more that I don't know. Right. So let's always be a student and remain curious. So I have lived my life at that point using that approach. And when I was doing the single family acquisitions, I realized it's going to take me a long time,
Mhm.
right? $200 cash flow per property, getting to a point where I need to get to is going to take me several hundred units, where I start to feel comfortable that now I have enough income coming in. Right. So I knew I'm probably not the only one because I mean I knew how to acquire a single family. That wasn't a hard thing, but it was more about I can't be the only one facing this challenge. There's got to be somebody else, right? And once that bug entered my mind, my journey there was I don't care what I do in life. I need to find somebody who has done this, right? My single mission in life ended up becoming I went to every single conference that I could get my hands on. I listened to every single podcast when I find time to a point where my kids starting to yell at me that, oh, here comes another real estate podcast, right? I think I've scarred them. And I'm hoping along the way I'll probably unscar them at some point. But that's really my journey was all immersion into real estate, not through books, but to real life people, right? Real life teachers. So eventually I was able to find somebody who basically said, why are you doing single family? Because you can buy multifamily. My question to them was, I don't have enough money. Like, oh, he's like, is that the only problem you have? I'm like, yes. So then he told me his age. He was 23 years old. And he told me his upbringing. I'm like, dude, how do you have these many units? Because I can't fathom. I
Right.
can't imagine. Most of us think multifamily. To own a multifamily, you need to be very rich. Only rich people own. You need to have a lot of money. You need to have a rich uncle or a rich upbringing or whatever. Only money. If you have money, that's the only way you can buy it. But that one question then opened up a whole can of worms of syndications for me. right? That now is a journey to figure out what is a syndication and how do I get into it. So my first foray into is, I thought that the biggest risk in syndication is not the deal. It's essentially taking responsibility for somebody else's money. And that's probably somebody who's looking to be active is going to be very relevant for them, but even for passive investors as well, right? That if the most important role you're taking on, responsibility you're taking on, is somebody else's money, you better know what you're doing, right? Because it's you can play with your own money all you want. Once you start taking Jason's money and Robert's money or somebody else's money, they are giving you, assuming that you know what to do, and they may not be they may not have done their due diligence, or they have, but it's your responsibility as syndicator to take care of their money better than you would take yours, right? So the only way again I knew was, let me look at what other people are doing. So that's always the question, is not how can I do it, but who has done it that I can partner with, right? You'll see a pattern in my life's journey. That's really the pattern I followed through. So I started meeting with a lot of investors, with a lot of syndicators, active syndicators, trying to understand their structures, trying to talk about them, trying to partner with them, basically starting to invest, becoming the most active passive investor anybody could ever find, right? Because that was my goal. My goal was to learn from people who are better than me. Instead of, I wanted to compress the timeline, instead of it being 10 years, I wanted to make my learning to be 1 year. And that's really when I found my first deal, and I lost a lot of money on that. And we can talk about that as well, right? So again, I would never hope on anyone to have for anyone to have to go through that. It was painful, not just financially, but also for my own ego. Right here,
Yeah.
you come, you think you knew it, but you didn't. And that's when I realized, again, I'm glad that happened, because I needed to go deeper into myself. What are my strengths? What are my weaknesses? As a syndicator, as you know, Jason, you can play multiple roles in a deal, right?
Mhm.
I was able to go deeper into what's my forte, what's my specialty, what's my strength, and let's leverage that, and then let's partner with somebody else who can hide my weaknesses, right? Who can be a perfect complement for me. So that's really through partnerships. Now I've been able to grow to a point where I am. If I were to grow that by myself, I don't know how long it'll take me. Eventually, I'll get there. But now, with partnerships, now I can foresee this 2,000 to becoming 10,000, in not too far of a time, right? At least I have a mental picture of how do I get there, because it's all about trying to partner with somebody who's better than you and figure out how you're going to add value to them.
Yeah. Yeah. I love that. I think your that concept of finding the people that are doing what you want to do, they're already showing success in exactly where
Mhm.
you're trying to get. I mean, that's a perfect way to kind of accelerate that learning curve and really shorten the time frame to sort of
Yeah.
making that those goals happen, making that success happen.
And you know this, Jason, very well. Multifamily, for some reason, I can't speak of a lot of other asset classes because I didn't go this deep into any specific industry beyond my consulting engagements. Um, I have found good syndicators are willing to share their wealth of knowledge. They don't hide it. They're
Yeah.
willing to share. You just got to know how to ask. And how are you adding value? What are you going to do with that information? They want serious students. They don't want tire kickers, like any one of us. They don't want to waste their time. Right? But
Mhm.
if you're genuine and you ask the right questions, and you feel like they feel like they're going to add value to you, they would share the information. It's a very, very abundant mindset community, which is great. And that's really the only place where you should be looking for. A community like that is what's going to help you scale and grow faster, because they'll take you with them.
Yeah. Yeah. It's very true. It's very true. Do you want to talk about that first deal?
Yeah, I'm sure. You're gonna make me cry again. That's
Yeah.
all right.
No, no, no. If you're comfortable, then
No, that's
I
fine.
think
That's
it's
fine, man.
good for people to hear
I
those
think it's
things
good
too, because
to.
it's not all sunshine and rainbows.
No,
There's
it's not.
definitely some things that can go wrong.
Yeah, I don't like the highlight reels. I like to show my real self, right? Because a lot of people talk about their successes and they forgo that that path to success was full of ton of failures,
Yeah,
and those failures are not easy. And it's not just my journey. I think every success has a failure
yeah,
story around it. So for me, it was the first deal where uh, I was getting frustrated that I can't find a syndicator to partner with, because either our values in the line or my value add was not something that they were looking for. So I just took the bull by the horns. I'm like, I'm just going to find my own deal. I'm going to market, which I really like, and I'm just going to go find a deal by myself, build my own relationships. I was fortunate enough that somebody gave me a pointer to a warm lead of a property management company. We were able to strike a conversation with them, and they were very willing to open up a deal structure for us, what they're looking at. And we picked up a, this is where it gets crazy. I picked up a portfolio of 5 different properties totaling 262 units. I would not recommend that for anyone's first deal.
Yeah, that's a big first deal.
That's a big first deal, right? I'm like, yeah, I can do it. And which I did fairly well, I would say, up until the end, because I was able to, I mean, I'm fairly good with underwriting, fairly good with Excel models and numbers. I was able to build up my own Excel model where everything was running off of each other, right? So I could look at a property individually, or I could look at a property combined. All the assumptions and everything were flowing through very well. So I felt confident that, okay, the model is there. Now, my understanding the market is there. This is not the first time in my life I'm underwriting, because I have underwritten businesses before. I'm like, you know what? Underwriting is easy. I could do that. So what's the next piece that I need to do? And there were whole conversations around the path to closure, from LOI to PPM to due diligence to having a Rolodex of the team members. I literally spent about 5 months of my life, along with working at Airbnb. I didn't see my kids. I didn't see my family. We bought to a point where we had the capital we needed to raise. We had it in the bank. We had the right team mates along with me who are going to help us make this successful. But the seller on the seller's side, not necessarily seller's intentionally, on the seller's side, somewhere 2 weeks before the deal closure, they recognized the bad debt, which essentially meant and it was a Fannie loan, our loan proceeds got cut by $2.4 million 2 weeks before the deal, right? So we had a question to ask ourselves: can we go raise $2.4 million? Should we do this? Is it the right thing to do anymore? Or should we lose our money? Really, 2, 3 options. Yeah, I mean, there are other options as well: negotiating, trading the property and all that stuff. None of that was going to work anyways. So really only 2, 3 options left for us. Now we looked at it, okay, what's our North Star? We went to our investors telling them a deal with a certain metric, with a certain amount of equity raise. If we're not going to go raise more equity and lower the debt, the total equity multiple is not going to change much. However, the cash on cash is going to change, right? Because the lower the leverage, the lower the cash on cash is. Again, mathematics there, right? So we're like, you know what? If we raise the dollars from somebody, assuming they're going to get 10% cash on cash, and now we're going to go to them and then say, oh, by the way, your total return didn't change. Well, we got you now. Now we're going to produce 7% cash on cash. Are you good with that? We just felt as our first deal that would be a bait and switch. Now, if you had a great track record, and this happened to be an anomaly, that's one thing. We didn't want that to start our track record as a syndicator, right? So, long story short, we essentially decided that we'll do the right thing. We'll return all of our capital to the investors. We're going to take the hit, and it was a pretty big hit. Where not just the hard money, but also the transaction cost. And I was a lead sponsor, so I took the most amount of hit, which was again the right thing to do, right? Painful, but what I walked away from that thing was, if you know what your North Star is, and if you have, if your integrity is pretty high, you'll do the right thing no matter how hard it is, right? It was a great test for me, because we got $6-7 million sitting in a bank account. It's very tempting not to return it, because you want to deploy it. But that's not the reason you got into this business. You didn't get in this business to deploy money. You got into this. I got into this business. You got into the business because you wanted to help people be financially free. So deploying their money in the wrong deal, which is not aligned with what you were talking about, was not going to be something that we could live with. So I essentially made that call along with my team member. Like, you know what? I'll take the biggest hit. Let's just call it off. Um, Lesson learned. It'll never happen again. But beyond that, it was an expensive college education. Let's just assume we went to Harvard and learned our lesson, and let's just eat it up, and we'll go forward with that. That's really the first deal, man.
Yeah, I I'm not laughing at you. I am laughing because I'm going through nearly exact same situation right now.
Oh man,
So I
I'm
am
so sorry to hear that.
about to be out a whole lot of money like today. Is it today is the
Oh,
day, like sort of D-Day on this. So yeah, I that's some, sort of as a little bit of an aside. It's funny because people, I think you see a lot of people that decide they want to be
hmm
active investors. They're like, oh, look at them, like they're doing great and all of
yeah.
this. And but as a and you see a lot of passive investors that worry about the
hmm
risk, but but your investors didn't lose any money, right? Like
None, none.
that's the thing is so the risk is substantially higher on
Yeah,
the sort of GP side of it,
it
especially
is.
before you even get it closed. So I think it's something that just people don't necessarily know that aspect, and it's kind of the things like this happen. If you can have a lot of money uh, into a deal before it ever closes of your own personal cash. So it's a challenging time, but it's as you said, it's a learning lesson. You do the right
hmm
thing, and you move on and kind of pick up the pieces.
You do. And to that point of losing money, right? Right now, so I was at an event with Ken McElroy, who is Robert Kiyosaki's
Hmm.
syndicator, right? He's on his team.
Yeah.
So we were having a dinner with Robert Kiyosaki, no, not Robert Kiyosaki, Kim Kiyosaki, and with Ken McElroy. And Ken McElroy basically said that a lot of my friends, syndicator friends, multifamily friends, are right now leaving money on the table, millions of dollars, because the deal is not making sense. It
Yeah.
takes a lot to get out, to get away from. If you put a $2 to $3 million hard, and walking away from that, I mean, yes, you have deep pockets. No matter how much deep pockets you have, $3 million of loss hurts everybody.
Yep.
Right? A dollar hurts. $3 million, I can't even imagine.
Yeah.
So that's a lot of
Yeah.
money
That would
that's
be
doing. Right. So
that
to your
would
point
hurt.
about risk, it's if you don't know what you're doing, you can get it pretty bad, right?
Mm.
So a lot of my friends say, "Hey, Saket, why do we go in syndication? Why don't we just go buy apartments ourselves?" I'm like, "Sure, go do it." It costed me close to 500K of a lesson to figure out how to do it. Hopefully, you pay lesser, right?
Yeah.
Because eventually you'll pay the price. It's not a matter, if not on the first deal, maybe your 10th deal.
Hmm.
Eventually, you'll hit a point where you'll realize you don't know what you're doing. And that's when you really want to make sure, is this the business? Is real estate a business or real estate is an investment? If real estate is an investment, is your answer, it's really a passive path, right? But if
Yeah.
you're willing to work at real estate investment as a business, then yes, passive active investment is for you, but it's not easy. But it's a lot of fun and you grow a lot because you'll see situations that you cannot imagine seeing in a lot of different businesses, right? But that does not mean it's path for everyone.
Yeah. No, I agree. And I think you don't. I mean, there's a lot of mentorship programs and
hmm
training modules, and there's so much stuff out there that social media of like, look at how amazing this is, and look
Correct.
at how much money I made for being a syndicator and all of this stuff. And it's not that it's not true. It is fun. It is like a very sort of accomplishment driven type of
Mhm.
feel, but it's a lot of risk, and there is, if something goes wrong, and or when something goes wrong, you're gonna have to swallow that, and are you willing to do that, and move
Yeah.
forward from there. So yeah, I just think it's a
Yeah.
it's a great point that
No, I think you're right.
stuff happens, and it's a you know you gotta figure out the way through it.
Stuff will happen, right? You know what? I mean, I love Tony Robbins, so you'll probably hear me talk about Tony Robbins a lot. I
Right.
quote him a lot. And Tony Robbins always says that most people overestimate what they can do in a year and underestimate what they can do in a life, right? That's really what happens when you jump into the syndication business. It happened to me. I can do it all by myself. I don't need anybody else in the world.
Yeah.
How hard can this be, right? And then you're like, oh, I'm going to go to 252 units. No, you shouldn't. Doesn't mean your listeners should listen to me and they shouldn't. I'm just saying, just make sure you go in with your eyes wide open. The
Yeah.
complexity involves that on paper you won't know.
Yep.
And that's really where the thing is that you want having a goal is great, but just make sure you get it checked with somebody. to understand the pitfalls, potential pitfalls.
Yeah. Yeah. And I mean, some of the things are out of your control, right? Like you're coming into this and they decrease your loan proceeds.
We can do much.
What do you do? You don't know that's
Can't
going to
prepare for
happen.
that.
Like as you said, Ken McElroy is saying a lot of people are losing money right now. I mean, the reason is because of the market. I assume that's what he's
Correct.
getting at. Like
Correct.
you go under contract.
Yeah, I think he's basically saying that investors don't want to, the syndicators don't want to get the deal because it's not going to work for the investors. So
Right.
they would rather eat up the cost than bring a crappy deal for the investors. That's not going to
Exactly.
work.
Exactly. And that's
really what it is.
Yeah, that's what we ran into, right? We got a deal under contract. Interest rates were 5% and now they're 9%. And it changes dramatically what those returns look like. And so if the seller isn't willing to then reduce price or you can't find any other options around it, well, here you are. You have to walk away. So it's the key is, as you sort of touched on before, the key is to not lose money for your investors.
Correct.
Right.
That's the number one goal.
Yep. That's
a number one goal.
Number 1, 2, and 3, really. Like that's always your focus.
Correct. I think the flip side of that is, in order to do that, sometimes you may have to lose your own money.
Yep.
And you have to be okay with that. If you're not okay with that, you're not going to grow as a syndicator.
Yep.
Right? As an active syndicator, you're going to be very limited because now you're putting your own money, selfishness in front of the service. And once you bring that goal, it's a very short-lived goal because eventually people are going to see through it, right? And that's not what you want as a reputation, anyways.
Yeah, yeah. If you're in the business for long term, you're going to take some of these hits to preserve your investors. I mean, that's really what it comes down to. So it's and I'm sure that the silver lining to this is those investors that you had all that capital lined up. I'm sure those investors appreciated what you did for them.
Definitely. I mean,
and so now guess what? They're going to invest in your other deals and they're going to move forward with you.
They see your true colors, right? In adversity is when you see people's true colors.
Yeah.
And they know we had an option to not return the money. We had the option to use their money to cover our loss. Right? We had a lot of options to do that, but we did the things, and legally we had the right to do it. It's not that we were trying to behind the gun.
Right.
But we chose to do the right thing, and they see it. They see it, and you gain their loyalty, you gain their trust, and they'll be with me, I know, for the rest of my investing career.
Mm-hmm. Yeah, that's perfect. So I'm sure there's a lot here. This is a long story that goes with this question, but so from a failed first deal to 2,000 units, what?
Yeah.
I'm sure this could be hours long discussion, but maybe some of the highlights is in terms of what did you do at that point? Kind of what's your focus? What are you because you mentioned before there's different seats at the table in a syndication. So what seat do you fill? What's your focus? I know you said you still work for Airbnb now. Is that
I do. I think I don't know when you're releasing. By the time you release it, chances are I may not be there. But we'll see at that point.
But obviously that's it's time consuming, right? You've got a full-time job and you've got 2,000 units. So there's a lot that goes in there. So how are you balancing that? I suppose is probably that
I'm not. That's why I'm looking to pick a path that's going to work for me. So I think I've been blessed with my family, right? So they know where my head is at. They know where so I think it's important to talk about one thing before we go into that answer. I will answer. I'm not dodging the question. It's that what's both me and Mavi, what's our bigger purpose, right? What's our bigger why? And once we talk about that, I think a lot of these things will start to become clear.
Yeah.
So as I mentioned, I grew up in India, and the only reason, Jason, you and I are talking today is because of what I've accomplished, and a lot of that is because of the education that my parents had invested in for me. Now, is the education system good or bad? We can have a different conversation on that. But in my case, it really got me where I needed to get to change trajectory at that point. But when I look back, at least in India, and it's not true for India, it's true for a lot of different countries. Even in the US, you can find that is a lot of kids can't even afford their second meal. They don't know where it's going to come from, right? So for us to assume that they're going to become the next wealth builders of the world, where they're going to be joining the cadre of you and me, Jason, and some of your listeners, where they could even dream of breaking out of the word financial freedom, right? They can achieve that. That's not something how they live their life, because they're not able to meet their basic necessities. So once that purpose was clear to me and my wife, we're like, you know what? Our life's mission is to essentially find deals, find opportunities where our investors can make the equivalent returns, if not more, than they would have if they invested with somebody else. But we will redirect our profits in making sure sponsoring the kids' education back home in India. Right. So our bigger why is not us anymore. It was, and it's probably gonna crop up once in a while here and there. But we have a different north star for us. That how many lives have we touched um, positively in our very short span of life? Right. That's what drives us. That's what fuels us. And the reason I'm telling you that story is because that equally relates to what you were talking about. Is how do I keep balance? I don't, because balance doesn't exist, right? I personally think it's a misnomer. It's one day your personal life's going to take over, the next day your work life's going to take over, the day after your health will take over. Something is going to get higher weightage in your life on an hour by hour basis, on a day by day basis, right? But as long as you're spending the quality amount of effort and time in how many hours or minutes or days you get for that aspect of your life, if you're able to give them the quality, even with our kids, if you're able to spend 5 minutes of quality time in one week instead of spending 50 hours, but you're on the phone all the time, that's a difference of balance, right? Yeah, you spent 50 hours, but you didn't build any memories. But there you spent 5, 10, 15 minutes with them, but they remember what you did with them because you were with them, right? So I don't think the concept of balance is real for me. I don't know what your theory behind balance is. I personally don't think balance exists. For someone like me, it doesn't exist. So I try to, like, you know what, today this is priority. We're gonna do that. And then I may not have the chance to talk to my kids like in the first year for 5 months. But it was not because I was prioritizing my work over that, but it was more because that's what was needed for us to serve that bigger purpose, right? For that, if I could sacrifice in my mind, now it did serve its purpose, but not the way we were hoping it would serve. It did serve a purpose because it got me on a right path, right, for investing. So it served its purpose, but not where it is. So when you start looking at what's your bigger why for everything you're doing in your life, work has a role to play, relationship has a role to play. But I'm not saying extract value out of them, but it's serving a purpose in your life, or you are serving a purpose in somebody else's life, right? As long as those two things stay in balance, I think everything works out. But that doesn't mean life's easy. So I don't want to say that life's easy. Life
Yeah.
has its own purpose and its own teaching, but at least you have a framework to take advantage of whatever is happening in your life and turn it in your favor.
Yeah.
Did I answer your question at all, Jason?
It answered
I
my
just went
question
around it.
and other questions.
Okay.
And I love it. And I just want to take, like, anybody listening to this, go back and listen to that, however long it was, 3 minutes, like, listen to that again, because I think that is so important for people to realize. And like that's one of the biggest take home messages I've learned from, like, networking with people in this space, in that there isn't there isn't a balance, right? You're 100%, there's no balance. It's what's my priority right now, and am I giving it 100%, right?
Right.
That's, and I just, you said this because, again, this is just funny, like this stuff that's coming up today. I wanted to show you this on, I don't know if I'll be able to make this look. So I think it's going to look backwards.
Yeah, lunch
And pizza with Logan. That's my son.
Oh, there you go,
Or
man. Yeah,
lunch and
that's
puzzle.
amazing.
Sorry,
Yeah.
with Logan. That's my son. And so we, he's, when you're home all day but you're working, like, sometimes it's hard for the young ones to understand that, right? So he's old enough now, him to understand a little bit more, but he's like, I've been asking me about this puzzle. It's been a busy couple of days. And so I was like, you know what, we're putting this on the calendar, and this is going to be our thing. And so it's like, on so many levels, that, like, everything you just said resonates with me, because I'm like, yes, that's exactly what balance means. It's like, okay, I need to make sure that I put this time in and I'm focused on spending time with him at that moment, knowing that, okay, now I can come in here and have this, fantastic podcast interview that's, he can't be involved in. But the other thing that you touched on in there is how your focus shifts from me or us to the impact. And I know your company, Impact Wealth Builders, like obviously there's people will, I think sometimes people look at wealthy people and almost look at them negatively. And it's like, why do you need so much money, without realizing that most wealthy people are at that point where they're no longer, this isn't for them. They don't need more money, but guess who does? Like the children in India that you described, like there's an uncountable number of ways you could make an impact with additional financial success. And that may be giving money, that may be giving your time. Like there's so many different ways that you can use that to your advantage. And so it's the same. It's been one of my one of my favorite things about this podcast is you answered the first question of the questions that I ask every guest, which is, what is your why? You just answered that. And I think it's just the things that you said are so worth kind of highlighting, the lack of balance, but managing that focus and then that impact level, the second level of why, right, is now impact.
I think the why, once the why becomes clear, and it was a long path for us, right? So, 2 stories. Do you have time for 2 stories?
Yeah.
I'll keep it short.
Go ahead.
Perfect. So back in 2008, me and my wife, we took a sabbatical. Now you may not understand what a word ashram means, but essentially a monastery.
Okay.
We were trying to figure out what to do with our lives, right? Because we were financially successful, careers were good, everything was working in our favor, but that's when you feel like something is not adding up. There's more to life than just making money. So we essentially figured out that, instead of giving time money, let's give our time. So we sold everything in the US. We essentially moved into the ashram, in the monastery in India. And we're like, we'll just kind of figure it out. Because until we feel the grassroots problems, we're not going to be able to empathize with anybody. Then it's become a fad that I want to help people, but you don't necessarily understand their challenges, right? So we wanted to understand, we want to live with them, those challenges. So we did that for about 2.5 years, but then life happened. And for whatever reason, we had to come back to the US. What the lesson we learned there was it's very important to know what money can buy, but it's way more important to understand what money cannot buy. Right? That was there. And along the way, when we came back to the US, I lost my path. And me and my wife both lost our path because we became focused on, again, making more money, because that was, again, the training came back, right? It doesn't, 2 years is not enough to retrain your brain. And then recently, over the last 2 years, I've lost 5 of my family members, including my sister, who was 2 years older than me, and my mom. And then I had pretty bad COVID back in Jan this year. I was going to go. And then I recovered from that. And my brother got a heart attack. And you know what? One thing, I was devastated, of course, when those incidents happened. But you always, given the training that I have, given the self training that I have developed for me, it's what's the lesson life's trying to teach me, right? Something's going on here. I need to pay attention to what's going on. Now, my answer may not be the lesson that the life is trying to teach me, because I'll never know, but it's a lesson that I thought would be the most important lesson at that time for me. And really, the lesson was life's too short. So if you're not serving your why, and you're waiting for X to happen before you can do Y in your life, you may not have that time. Hopefully, all of us live 150, 200 years. Hopefully all of us a long life, but we don't know. So if you don't know, then the only way to live your life is to immerse yourself in your why. And then whatever you do at that point, you're going to be successful because your why is strong enough to carry you forward. Adversities are going to hit, right? They're going to come. So that's really where, when I look back, as in, to your point, is more about you got to figure out your why, because why is not just going to give you the money. It's going to what's going to give you the most amount of fulfillment. And in the end,
Mhm.
all of us are not looking for money. We're looking at money to give us the freedom to go find fulfillment in our life by doing things we really like. So, but doesn't have to be sequential, right?
Yeah.
It could be, you could parallel process a lot of these things. It doesn't have to be sequential, but most of us have, like I was talking to somebody this morning as a prospective coaching client. They're like, I have to, my path is that I'll wait till 70 before I can do some impact work in my life. The question to them was, what if you don't have till 70?
Yeah.
It's like, I don't know. I'm like, yeah, that's where we need to figure out, right? That's really the most important thing. How can we compress the time, and how can we do things more in parallel?
Yeah. I mean, it's super powerful. I love it. I love literally everything you just said. I think it's just, it's so important to, kind of, I guess, use our experiences to form these, kind of that form this direction, right? This direction of impact and helping others and giving back, and whatever form that is. And it's like, and you don't have to wait, right? You don't have to
You
wait
don't. You
until,
don't.
if you don't have money, you have time. You have, there are ways to do it
Correct.
aside from just, like writing a check. So this is not exclusive to only to, people that are already wealthy. And
Mhm.
there's, I know there's a very famous quote, and I'm going to butcher it, but essentially, like, the more you give, ultimately, that, the more that will come back to you.
Yeah. I can't remember the quote, but I know what you're saying.
Yeah, I can't. I know I'm way off base on exactly how it's worded, but
Yeah.
the idea is that, and they've done studies, right? Like people that give to charity, they tend to be have, bigger successes and things like that. So
Yeah.
it's just kind of it it's a win-win for everyone, right? It's a
Mhm.
win. You don't have to, you're not sacrificing yourself, because you're
Correct.
getting that fulfillment, you're getting that, and then you're also helping others. So it's not, it's not, certainly not a one-way street.
Correct. What is this? Jim Rohn, who was Tony Robbins' mentor, he always said that, and I'm butchering his quote again. You can get whatever you want in your life if you just help enough people achieve what they want in their
Yes,
life.
that's the one I was thinking of, and I just could. Yes,
Okay.
you're.
All
Thank
right.
you for clarifying. I'm like, I know this. It's like one of my favorite quotes.
Yeah, I love
Um,
that quote, and I think that is basically having a service mentality, right?
yep.
Just add value to somebody else's life, and the more you do that, money will come.
Yeah. Yeah. Well, Saket, we're uh, running a little bit long, which I don't care if you're fine,
Mhm.
but I wanted to. You've already answered sort of the first of the questions, so
Yeah,
let me get you the other questions, just to
sure.
be for completeness. And I think some of them are important too. The first one is just, I like to ask every guest, what is something about yourself that maybe people don't know, that isn't common knowledge? Can be a special skill, a hobby, something just to let them know you a little bit better. We know you're a successful real estate investor, and
Mhm.
obviously successful in general, but something kind of outside the box that you're willing to share.
Yeah, I think it's just so funny. Somebody else asked me that question yesterday, and I was actually thinking about it, and I think it's really, I think my hobby is really to poke holes in everything. It may sound very different, like it's not a hobby of music or anything else. I like to challenge status quo.
Yeah.
That's my superpower. And whatever it is, right? I mean, you give me a perfect sheet of music, I'll try and find what's not working in there. Doesn't
Mhm.
mean I'm a music major. I don't even understand how to read music
Yeah.
sheets, but I'll try to find why is it the way we do things, and how can we do it better.
Yeah.
Like my friends are super frustrated with me most of the time because I'm always
Yeah.
asking the question of why,
Yeah.
right? Why are you doing certain things, to a point where they've basically banished me from parties after 11 o'clock, because once that discussion starts, it goes to like 5 o'clock, because that's when the real stuff comes out, right?
Yeah.
When you start asking these
Yeah.
questions of why and status quo, and challenging your own assumptions. I really live for that, for myself and for people around me.
I think
So it's
that's
not a hobby, but it's really my passion.
yeah. I mean, I think that's a secret behind most success is that you do question things and don't just go along with status quo and because that's how you find a better way to do things, right? There's
Right.
it. I get so frustrated when people are like that. That's just how we have always done it. Well,
Yeah.
that's that. Let's rethink. Let's see how we can reframe it. So no, I think
Because
that's
it's
fantastic.
conventional thinking is easy.
Yep.
As one of my friend Dave Zook says, you can either be conventional or you can be wealthy. Can't be both.
Right. Right. Yeah. No,
There's a lot of truth to that.
makes total sense. When people hear this and they want to reach out to you, what's the best way?
Yeah, definitely. I mean, you can look at my website, impactwealthbuilders.com. I recently wrote a book, so there's a book launch link on my webpage. You don't have to go buy the book. I will give you the book for free. I'll send it to you, mail it to you. If you schedule a call with me, I love learning about people. That's my way to whet my appetite in connecting with you and see how can I add value to your life.
Awesome, and we'll put whatever you want there in the show notes too, so we get people who
Yeah.
have access to that. Final question for you: what advice would you give to someone who is getting started in real estate? Right, so they're maybe back at that stage where you were when you had a handful of single family
Yeah.
houses, or
Yeah.
they're looking to, or maybe even before that, whatever, just that kind of piece of advice to get them going.
Yeah, I think really talk to somebody. Talk to somebody, their coaches, their mentors, their paid coaches, their paid mentors, or unpaid. Find whatever works for you. If you have the resources, find somebody who can shorten your curve, learning curve, right? To compress the timelines. And be clear about why you want to do certain things. Like it's very easy, as you mentioned, Jason, the social media, you see highlight reels, right? Where you say that, hey, um, do this, this, and that, and buy a no payment down house and this, creative financing. And nowadays you see multifamily ads popping up, crowdsourcing popping up. There's a lot of noise. I'm
Mhm.
not saying they're right or wrong. Who am I to judge that? But it's more importantly is what's right for you is what I'm after, right? So, and the only way you can find that out, there's only two ways. One is by trying every single thing and either succeeding at that or failing at it. You don't have enough life. No, none of us have enough life to try every single thing, right? But the other faster way is to talk to people like Jason, talk to me, talk to other folks who have either done it themselves successfully or they know somebody else who has done something else successfully and they can connect the dots for you and just say, you know what, somebody comes to me, I'm like, hey, I know Jason's good at it. Why don't you let me do a warm introduction so Jason can connect with you and he can share his perspective. And then you decide what's the path for you. But the key thing is once you pick a path, do not deviate. Because this industry is it's very easy in this industry to have a shiny penny syndrome because every single penny is shiny. So it's very easy to get lost and distracted, right? And that's the job again for a coach to help you keep in line, to keep in check, to make say, you know what, this was your goal. If it has changed, let's talk about it. But if nothing has changed, you're not allowed to. I won't encourage you to change your path, right?
Right.
Have somebody else keep you in check. It could be a spouse, it could be a coach, it could be a mentor, it could be a friend, whatever. Have an accountability partner.
Yeah. I love it. I love it. Um, well, this one for sure is going to be a popular episode. I'm excited. I thank you for coming on and sharing all of your wisdom, providing so much value to me and to the listeners. I really appreciate your time.
Oh, thank you. Thank you, Jason, for having me and letting me share my stories. I really appreciate it. If I can, as I tell, if I can touch one person's life in this audience, I think I've served my purpose.
I feel like there's no doubt that will happen. And for all of the listeners, when you hear this, I know you're going to like it. So please like, rate, review. Let us get this out there to more people. But yeah, thank you so much.
Actually, you
Saket.
know what,
Thank you.
Jason? I'll add something to it.
Yeah.
If you, how do I say it? Yeah. If you book a call with me and you show me a screenshot of the review that you wrote for Jason, I will I will add on my free training, passive investing training, as part of my value back to you. This show is great. What it's doing is amazing. So if you show me a screenshot, I'll send you more material that usually I charge for.
That's fantastic and very generous of you. Thank you very much. I
Sure thing.
appreciate that. And I hope people take advantage of that. That's wonderful. All right. Well, let's go ahead and sign off. And I think you'll be sending that out a lot. I hope people are going to love this one. All right. Have a great day.
All right. Thank you, buddy.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.